You're listening to Corner Room, where we break down the stories behind the headlines. Welcome back to Corner Room. I'm Alex, and wow, we have a truly diverse stack of sources to get through today.
We really do.
And with me, as always, is the person who turns all those data points into actual insight.
It's always a pleasure. And today's deep dive is, it's going to take us on a genuine tour of the digital economy.
A tour is a good way to put it. Where are we starting?
We're starting with some of the market drama in crypto, then shifting into how political ventures are, well, wading into digital assets.
Okay.
Then we'll explore a startup that's trying to automate IT firefighting, and we're going to finish with this surprising new philosophy on productivity called vibe coding.
That is a huge spread, and it really speaks to how quickly the lines are blurring between, finance, media, and enterprise tech.
Yeah.
So what's our mission as we sort through all this?
Our goal is to give you, the listener, a shortcut, a way to be well-informed quickly. We're not just going to recite headlines. We're extracting the fundamental dynamics, the so what of it all. The market moves, the business models, the surprising cultural shifts. Let's make sure you walk away with the key insights.
I love it. Let's start with that volatility you mentioned. The crypto market just took a pretty significant dip.
It did.
Bitcoin slipped a few percent after what traders are calling the nightcap sell-off. It felt like a really quick, aggressive move.
It was, and it was a direct reaction to regulatory action, or I should say regulatory inaction.
So the SEC.
The U.S. Securities and Exchange Commission, the SEC, yes. They once again delayed their decision on approving the highly anticipated spot Bitcoin exchange-traded funds, the ETFs.
Okay, we absolutely need to pause here because this drama is central to the entire crypto story right now.
It is.
For anyone listening who isn't deep in the weeds on this, can you just break down what a spot Bitcoin ETF actually is and why is it such a huge deal?
Of course. So an ETF is basically just a package of assets that you can trade on a regular stock exchange. Super easy. The key word here is spot. A spot Bitcoin ETF means the fund holds the actual Bitcoin. It's not a derivative, it's the real thing, and that provides regulated access for everyone.
Which solves a huge problem for the big institutional investors, right? The security and the custody.
Exactly. It means they don't have to worry about managing, complex crypto wallets or private keys. That's always been a huge barrier for, say, a massive pension fund.
So it just brings Bitcoin right into the traditional system.
Seamlessly. And if it gets approved, you're talking about hundreds of billions of dollars just waiting on the sidelines that could pour into the market. That's why the anticipation has been so high.
But wait, if the benefits are so obvious and you have giants like BlackRock and Fidelity filing applications, these are the most established names in finance. Why is the SEC pushing back so hard?
Well, that's where the nuance is. The SEC isn't necessarily against the product itself. They're just intensely concerned about market manipulation.
Okay, so what's the sticking point?
It's something called a surveillance sharing agreement. Essentially, they want proof that the exchanges hosting these ETFs have systems in place to detect and stop manipulation in the underlying Bitcoin market.
So they're worried about the integrity of the actual market where the fund is buying the asset?
Precisely.
Yeah.
They are demanding proof that the whole infrastructure is robust enough to protect investors. This delay, it just signals that in the SEC's view, these agreements are still incomplete.
And that uncertainty is what fueled the sell-off.
It did.
It's just a reminder, isn't it? This is still an asset class defined by high drama. We saw Bitcoin flirting with $48,000, so it dropped to $41,000. Feels big, but in historical terms?
It's baked in. If you're in this space, you have to accept that 10% swings are, pretty common. But if you zoom out, the long-term story hasn't really changed.
How so?
You still have central banks talking about digital currencies, big companies integrating crypto payments. This is a marathon, not a sprint. And that institutional interest is still the engine, despite these, regulatory speed bumps.
Speaking of blurring those lines, that marathon brings us perfectly to our next story. Trump Media and Technology Group.
TMTG, yes. The parent company of Truth Social.
They're exploring a really fascinating move into tokenization.
They are. TMTG has been preparing to go public through a SPAC merger, but now they're actively looking at integrating with cryptocurrencies. It really signals a move to create a more direct, financially engaged relationship with their user base.
So what does that actually look like? We're hearing about two different paths they're looking at.
Right. The first one is a pretty practical payment system. They're reportedly in talks with Crypto.com to let users pay for things like premium features with cryptocurrencies.
Like with Bitcoin or...
With Bitcoin, or maybe even the native CRO token, it's a strategic move. It gives users more flexibility and could lower transaction fees compared to, say, a credit card.
It's interesting they're partnering with Crypto.com specifically. That sounds more like a structured deal, not just adding a simple Bitcoin button.
Oh, absolutely. The partnership would likely favor Crypto.com's ecosystem. The goal is to tap into a group of people who are already really engaged in digital finance.
Okay, and what about the second path? The one that's really capturing people's imagination, the Trump token.
Yes.
Yeah.
This would function as a kind of loyalty mechanism. It could be an NFT that acts like a membership card, or maybe just a simple loyalty coin built right into the platform.
And what would holding this token get you? Are we talking standard rewards?
They're modeling it on concepts we see in, travel and retail. Think early access to exclusive content, discounts on merch, and maybe even voting rights on platform decisions.
Like choosing which guests appear on a stream or something.
Potentially, yes. It's all designed to build that sense of community and ownership.
But this is where the regulatory rubber really meets the road, right? Anytime a company issues its own token, it has to ring alarm bells at the SEC.
Huge alarm bells. They are looking at one thing above all else. Does this token qualify as a security?
And there's a specific test for that, isn't there?
There is. It's called the Howey test. And to simplify it, the test asks if people are investing money in a common enterprise with the reasonable expectation of profits from the efforts of others.
So if people buy the Trump token, hoping the company will grow and the token's value will rise because of what TMTG's management is doing, that sounds like it could fit.
It absolutely could. And if the SEC decides it is a security, TMTG would face an enormous burden.
Like what?
They'd have to register the token offering, follow really strict reporting rules, and basically submit to the same intense scrutiny as any other publicly traded company. It's a huge, costly process.
That's a bold experiment, but that regulatory tightrope is incredibly perilous.
Extremely.
Wow. Okay, so a high-stakes gamble. We've covered market chaos and political tokens. Let's pivot to something a bit more grounded in enterprise operations. A fascinating new startup called Resolve.
This is a great pivot. Resolve was launched by a team of former Splunk executives, and they just closed a $10 million seed round.
And they're targeting IT incident management. For listeners who haven't had the pleasure of being in an IT war room, can you paint a picture of the problem they're solving?
Oh, it's digital chaos. Imagine a major website goes down. Traditionally, you have dozens of engineers scrambling to figure out why, and with the modern shift to the cloud and remote work, systems are just incredibly complex.
So an engineer isn't just looking at one warning light. They're drowning in like thousands of notifications from 50 different dashboards.
Exactly. The process is manual, it's painful, they waste hours just trying to connect the dots between logs from all these different tools, Datadog, Splunk, AWS, just to find the root cause. It leads to something the industry calls alert fatigue.
We all know that feeling of getting a work ping at 3 a.m.
And this is trying to remove that human anxiety from the process. Resolve is building an AI-driven platform that acts like an intelligent virtual coordinator.
And it does what? 3 key things.
3 crucial things. First is aggregation. It just sucks in all the data and alerts from all those different sources and standardizes them.
Okay, it gets everything in one place.
Second, intelligent prioritization. It uses machine learning to look at past incidents and automatically figure out which alerts are actually critical. Then it sends tasks to the right teams immediately.
So fewer people getting paged for something minor. What about actually fixing the problem?
That's the third and most innovative part. Automated remediation for common issues, like restarting a database that's timing out.
Just stuff that happens all the time.
Exactly. The AI doesn't even need a human. It can diagnose the problem and deploy the fix automatically. It only escalates the really unique, complex failures to a human engineer.
That is a true game changer. It shifts the engineer's job from being a constant firefighter to being an innovator, which is, I imagine, why inventors are so bullish on them.
It is. They're betting on the founder's track record at places like Splunk and Sumo Logic. It's a massive market. Enterprises are desperate to save engineering hours, and Resolve is promising to automate away those panic room firefights.
Automation, freeing up human creativity. That's a perfect segue to our final topic. It's about the psychology of work. Fortune reported on this fascinating cultural shift in tech called vibe coding.
Vibe coding. It sounds kind of relaxed, but it's actually a very intentional productivity philosophy. It's championed by leaders like Alexander Wang, the CEO of Scale AI.
And the core idea is what?
The core idea is simple. Prioritize the engineer's creative energy and their collaborative flow state over rigid, time-boxed metrics.
So they are intentionally optimizing for that flow state. We hear that term a lot, but what does it actually mean here?
Well, flow state is that feeling of complete immersion in your work, where you lose all track of time. Vibe coding tries to create environments where that happens naturally. It's the total opposite of rigid processes like Scrum sprints, which often force developers out of their creative groove.
So what are the actual things they do to create this vibe? How do you scale creativity?
They focus heavily on synchronous collaboration. So lots of pair programming, lots of riffing off each other like jazz musicians, just encouraging spontaneous brainstorming instead of scheduled meetings.
And the environment itself.
Environmentally, it means dedicated shared spaces, physical or virtual, with stimulating visuals, specific music playlists, great snacks. It's about creating psychological safety so people can do deep, focused work.
It sounds like they're breaking down that old image of the lone programmer coding in the dark.
Exactly. It's acknowledging that software development is a creative act, not just a mechanical one. And this isn't just some startup fad. We're seeing major companies adopt very similar ideas.
Oh, really? Any big players getting on board?
We are. Bill Gates has been very public in praising experiments at Microsoft, but the best example is probably Meta. They're building what they call innovation pods based on this premise.
Now, what's an innovation pod?
It's a small, structured team that physically puts engineers, designers, and product managers together so ideas can just cross-pollinate organically.
That's brilliant. So are the results actually backing this up? Does a good vibe equal a better product?
Well, the internal data is pretty compelling. Meta found that one of their pods was able to cut feature development time by 20%. And internal surveys show the teams feel way more motivated, and developer retention rates are up. The goal isn't just efficiency, it's about making a leap in innovation.
Wow, we've really spanned the entire spectrum today. We started with the chaos of Bitcoin and the SEC, moved through TMTG's high-stakes crypto gamble,
Learned how AI is automating IT with Resolve.
and finished with the whole cultural shift of vibe coding. It's a lot.
But it highlights a central theme, right? Technology is just forcing us to rethink these fundamental structures. How we interact with money, how media organizations work, even the psychology of how we do our best work. The pace requires constant adaptation.
Absolutely.
Oh.
And as we leave you with all of this, here's a final thought to chew on. Building on that TMTG story, consider the ethical questions of tokenized loyalty. Does offering a financial stake, even a small loyalty coin, in a media or political venture, does that fundamentally change the nature of community and subscription? Something worth mulling over.
A fascinating line to walk. Thank you for diving deep with us today.
My pleasure. And thank you, the listener, for tuning in to Corner Room. Stay curious, friends.